Well, good afternoon, ladies and gentlemen. Happy Monday, November 17th to you all. It's great to see you here today for our Finding the Best Long Options for Your Stock. Today's presentation is going to focus on one of the PowerOptions signature tools, the Long Option Finder. We're also going to spend a little bit of time on the search tool and discuss some of the criteria that we use for identifying new long call and long put transactions. Now, one thing we want to cover first is why would we want to use PowerOptions for long option positions? Well, number one, speed. We're going to show the long option tool today to allow you to identify the best long option based on your sentiment for the stock or index or ETF going forward. Analysis, once you've identified those positions, you can do further research and analysis to take a better look, a more in-depth look at the stock or the options field. And then, of course, the patented search capability. We're going to show you how easy it is to set up a search or evaluate the search criteria for identifying a new long call or new long put trade as well. All right, so we're not going to do too much in the way of introductions. I am going to launch a couple polls right away. Just want to get to know everyone in the audience a little bit better. And the first poll is pretty simple. I just want to know, are you currently trading long options right now? Are you currently buying calls or buying puts right now? You might not be trading them actively, but you're researching as a new strategy. You might be a frequent long options, long call or long put trader. You may have just started, but you're just dabbling in long calls or long puts, or based on market hesitation or the way things have been going, you may just be looking to buy puts or calls, for example, in the inverse ETFs. So just let me know what the view is there. What is your experience? I'm going to leave the poll open for a little bit right now. And then we're just going to have a quick follow-up poll there, and then that'll be the end of our polls for this afternoon's presentation, and we'll jump right into the tools. Okay. All right. Well, most of you have already voted, and we've had the poll open for about 55 seconds or so, so I'm going to leave it open for another 10 seconds. If you haven't voted yet, I encourage you to do so. All right. Let's go ahead now. 5, 4, 3, 2, 1. Let's close that poll, and we'll, of course, share the results with everyone. 10% of you aren't trading long calls or long puts actively right now. You're just researching a new strategy. That's fantastic. 52% of you are actively trading long options. 29% of you only dabble at this current time in using long calls and long puts as part of your portfolio. And 10% of you are looking to maybe buy puts on the indexes and ETFs, or maybe buy calls on something like the VIX or an inverse ETF to protect the portfolio. All right, and let me just follow that up with for those of you that are frequently trading long options or you're dabbling in long options right now, let's follow up with our second poll. For those of you that are actively trading or dabbling right now or currently trading, how often or how long does it take you to identify new positions for your long calls? You spend less than 5 minutes on your research and analysis. Maybe you already have the stock and you continuously trade just long calls against it, or maybe a broad-based ETF or index. Usually spend about 10 minutes or so evaluating different positions and looking, of course, for new trades that are there. Or do you spend more than 30 minutes researching the stock and the option as well? All right, so we don't expect everyone to answer this poll, of course. So many of you, 39% of you or so, or 29% are just dabbling, and another 20% are just researching right now, or you're looking in a different way to maybe protect your portfolio. All right, I've had poll open for about a minute. We're going to leave this open for another 5 seconds. Looks like we have a pretty savvy audience here, a pretty intense research audience, which is great. Let's go ahead and close that poll, and I'll share the results with everyone once again. Now, it looks like 9% of you spend 5 minutes or less researching the long calls or the stock positions. 23% of you are about 10 minutes or more, and then 30% of you, 68% of you spend more than 30 minutes or so researching the long calls or the long puts. Very good. All right, let's go ahead and hide those, and let's jump over to our tools for the time being, and let's take a look at how PowerOptions can maybe help you save some time with your research and analysis, and of course, how you can better identify the best long call or long put for your position. Now, to start today's presentation, we're just going to focus on long calls and long puts. I already have those two strategies added, but let's clear this up a little bit. We're going to go into the Other Strategies tab. I'm going to go ahead and remove some of these other tools right now. I'll leave long strangle as it's kind of a combination between the two. Let's just take everything out there, just have our long calls, long puts, and long strangles. We could add long straddles as well, but let's just leave this as is. Let's go ahead and save that configuration. Now, when I'm looking to identify the best call or the best put option on a stock, meaning there's a stock that I've been tracking, and there's a stock I've been following, something I read about in the news, and I have an expectation of where the stock might be trading. As an investor, you may go to your broker, you may look at an option chain, you may take the available options for that particular stock or security that you have a specific sentiment on, and then you run it through a Black-Scholes calculator to see what the return would be. And then you'll take the next option and do the same thing, and then you may go out a month later, look at some of the other options at that same strike value to evaluate which one would give you the best return potentially based on your sentiment for the stock. Well, one of our signature tools, the Long Option Finder, which is also available just under the Long Call or the Long Put menu as well, but the Long Option Finder is going to save you some of that time with your expectation of a stock going forward. So for an example, let's take Apple. Apple's currently trading at $114.10 the last time I looked, just before the market close. Now, if I had a sentiment that Apple was going to gain 10% or so in the next 30 days, maybe some good Christmas sales, something along those lines, what I'm going to do is just go ahead into the Long Option tool and I'll plug in Apple. My expected price of the stock, well, we're looking for a 10% gain, about $114. So let's say we feel that the stock might just gain $10. It might go up to $124 within the next 30 days. So let's call it by December 20th, 2014. So we know the stock. We have a bullish sentiment on the stock going forward based on our analysis or what we read. Someone's projecting the stock has the potential to gain 5-10% or so in the next 30 days. Now, the one thing we also want to enter is how much of our portfolio are willing to risk in a long option position. Well, if I had maybe $15,000 of free capital in a $100,000 account, I might only be willing to risk 1.5% of my total portfolio or maybe 10% of my free capital in the position. So let's invest $1,500 into long calls on Apple. Now, in that brief moment, in what you just saw, in that brief second, this tool went out and looked at all available expirations for Apple series, including weeklies and standard expiration. It grabbed the current option price. Just want to change that. There we go. Grabbed the current option price for every option available, calculated how many contracts we could buy based on that initial investment amount, and then calculated what this option would theoretically be worth if the stock did hit our target price on our target date. And here we see that the December 119 call at $1.40, we could afford 10 contracts for that position, would theoretically be worth $5.10 if the stock did hit 124 on December 20th, and this would result in a 261% return. We're not seeing a lot of the other cycles here because they don't have a high as a theoretical return than our December 26 series. Now, with a quick analysis, this shows us which option would give us the best theoretical bang for the buck going forward. Why aren't we seeing other expirations, such as the standard December 20th expiration or the weekly December 12th? Well, it's because we selected a target date of December 20th. If I lower this back to the 18th, I went ahead and submit that screen. Now we see a cycle here. We do have one December 20th, the 120 call, would give us a better theoretical return based on our expectation of the stock and the target date where we feel the stock might hit our target price. So rather than going through and individually calculating all of the different options on a chain using any kind of pricing model, the long option tool is doing that for you. It's taking all of that into account. Now, this was just on a bullish basis. If I had the reverse sentiment, I thought that Apple might pull back to $100 in the next 30 days or so, we could simply plug in that change for the expected price. We'll keep our investment amount of $1,500, and a target date of 12/18/2014. Now when we submit that, in that brief instant, the tool did the opposite. It went out and looked at every put option that was available on Apple, including weeklies and further out series. And here we see that the December 105 put for the 20th December expiration, our standard expiration, currently at a price of 49 cents. It's a deep out of the money put, or slightly out of the money put, with our stock currently at $114. You could afford to buy 30 contracts based on your investment amount of $1,500. But if the stock did hit your target price of $100 on or around December 18th, the value of this December 20 call would be worth $5, so you're looking at almost a 900% return from your original investment amount of 49 cents. Now this tool is, you can choose, of course, we always choose as a default to look at actively traded options, so we're not looking at things that are too far out of the money that don't have any liquidity or open interest, for example, or too deep in the money, where you might just have an intrinsic value view, a delta really close to 1, but there hasn't been any active trades on it. But if you wanted to view non-actively traded options on this tool, you could simply uncheck that box as well. Now let's go back to the main home page for a second. And what I want to show here is in our main home page we have a variety of different data pods that you can view. The top stock gainers today, CLDX, FOLD for example, ETF gainers and losers, and our power watch list, and so forth. The one thing we might want to look at are the earnings announced today. So let me just go ahead and add that pod to our field. Here we see the earnings that came out today. It might have already come out. We have things such as JD, TSH, Tyson Foods, and Agilent Corporation as well. But I'm going to go into View More Earnings and Announcements. And I want to do this for an example that came up the other day during a presentation. Now we see a long listing of positions that came out today on 11/17. Let's scroll down here. Let's see where our recent ones are. A lot of stocks here. Here we go. Here's some big names for 11/18, including Home Depot, Medtronic, TJX, PetSmart's a good one, Dick's Sporting Goods, Jack in the Box, and so forth. But let's take a look at Home Depot right now, currently trading at 98.03. I'm going to go back to our long option tool there under the Signature Tools menu. We haven't done any research and analysis on Home Depot, and I'm not making a recommendation or suggestion. But with HD roughly trading at 100, let's say we're expecting a 10% pop in the price for the 18th, tomorrow morning, or probably tomorrow afternoon actually. But we're expecting a 10% gain, so maybe we're expecting the stock to be trading around 108 or so within the next 2 to 3 days. So tomorrow's pop and then maybe a little bit more. So let's go ahead and put in November 20th, 2014. And again, let's say we put in just a regular price of about $1,500. And that's, of course, assuming that if I had about a $100,000 account, I'm only risking 1.5% of that into this portfolio. I'm sorry, that would be the higher amount, but look at to only risk maybe 3 or 4% of your total portfolio into one long call position, depending on how much free capital you have as well. All right, now let's go ahead and submit that. And again, we're only looking at actively traded options. And here we see that the closer in standard expiration for November, this Friday, just out of the money 105 call, very interesting, only has a price of 7 cents on this position. But if the stock did jump up to 108, well, naturally, we'd be close to our premium of $3. And our return, of course, would be extensive based on that gain if we're expecting that 8 to 10% increase due to the earnings. And, of course, we wanted to switch it and look at the decrease. If we put in $90, it'd be almost a 8 or 9%, 10% decrease on the position. We see the deep out in the money right now, 92.5 put, for the closest expiration only 22 cents, would gain up to about $2.52, and that's mostly of intrinsic value. Well, this isn't a really good example to use, but I'm going to use it anyway. We talked earlier about now further research and analysis. I'm going to jump back to our increase there of 107, 108. I want to look at the calls here. Now, this deep out of the money call does have a premium of only 7 cents. We notice the call implied volatility is at 0.33. Well, the one thing I'd want to know before going into this is I'd want to go into the research and I want to take a look at the option research for this particular option. This takes us to the PowerOptions quotes page, where you have a lot of data of things of all of our Greeks right now, the percent to double, the range out of the money, and so on and so forth. But one thing I want to consider anytime I'm looking at an option, specific, and this is the question that came up, and this is why I'm handling it now, John. John says on the HD example, how can you take into account the expected volatility crush after the earnings release? We're going to do that right now. On average, what we see here is the current percent implied volatility range of our November 105 call that only had the 7-cent premium that we were looking at that high return for if the stock to jump up to 108. But we see that this option is currently at 81%, roughly 80.5% of its total implied volatility. The implied volatility range since this option has been released is about 0.14 to 0.38. And down below, we have a field here, a graph of our implied volatility of this November option versus the option bid. And if we go back in time, this graph is showing the entirety since the option was released on the market. So we start off with a range of our implied volatility of about 0.18 when the option was first released several months ago. And we see it stays around that range, even dips down here. I have a pop-up here. That was probably from the last earnings, probably about back in August or so. And then it dips back down. This crash here from 0.23 to 0.18 is exactly what John mentioned. That was probably due to the last earnings. And now we're back up to about 0.29 or 0.3. So maybe our expectation is this is going to revert back to the norm, the volatility crush, right after that event happens. We could assume, looking at the history here, that that would be maybe around 0.17, 0.18, somewhere in that range. So let's use 0.18 as a standard volatility. Now let's go back to our optimized long option finder. It's using the current implied volatility of 0.33 to calculate our theoretical worth. In this case, John, there's not going to be much difference. Let me show you why. Even if we revert back to 0.17, the lower value, let's go ahead and submit that. In this scenario, instead of having a price of 3.02 using 0.33, if we use the 0.17 down below, we still have a value of 3.01. Now, John, in this case, why that happened is because we're looking at the 22nd of November expiration, the expiration this Friday, very close in time. And although we have a 105 call right now with an implied volatility of 0.33, even if we cut that in half back to the norm after the volatility crush, this November 22nd 105 call would still be worth $3 because we used a price of 108. It would have to be at intrinsic value, and that's essentially what it's reflecting. It's reflecting the intrinsic value there. So in this case, the volatility crush wouldn't come into play because we're so close to expiration, and this option would just go to intrinsic value. But John brings up a very valid point, and we have to take that into consideration. Yeah, in this case, HD moved from OTM to ITM. We're looking at a 105 call. Remember, HD is currently at 908, so we're $7 out of the money. With the large gap up in price to 108, it's 10% from a positive earnings. We'd be at intrinsic value because we're so close to expiration. Now, what about the reverse on that? Let's take a look and say even though earnings are coming up, let's say we got a small pop, but we expected Home Depot to continue to move up in price, and we're thinking that maybe around December 10th or so, the stock will reach this 108 strike price. So let's go ahead and plug in December 10th. And let's run a clean screen here. Let's run a clean search. All right, so now, and this is kind of interesting, we wouldn't expect much of a volatility crush, would we? With this view in mind, 1210, our near-term options aren't affected as much by the the farther out options aren't affected as much by this near-term event. Our defaults going out in time are already at 0.18 and 0.20. They're not as inflated as the options coming up this Friday, which are the ones that are going to be most affected by the earnings event. But yes, as you mentioned, John, it would have gone from OTM to ITM, so we'd be stuck in intrinsic value, and we'd have to have at least that $3 worth of premium as well. Now let's go back. Let's find something a little bit more interesting. I don't want to say interesting per se, but let's go back here I'm going to go back to my home, and we're going to go back into that listing of the earnings announcements. We do have a lot of them, but I'm going to look for something that's a little bit more volatile and actually crosses the 11/20 earnings or expiration. I want to go out to next week, 11/24. A couple of Chinese ones here. Trina Solar, perfect example. Lower priced, TSL, more volatile. So let's take a look at TSL, current trading at 9.53. Let's go back to our optimized long option finder and let's plug this in. So TSL, and we're looking at a current price of $9.53. So let's say maybe we're expecting a good pop, and this stock might jump up to $11. So it's only $1.07, but that's going to be a little bit more than 10% gain. Since the stock is only priced $9.53, let's only put in maybe $500 to start. Let's use that as a value. And again, we've got earnings coming out on 11/24. So it's Monday of next week. So let's put in a target date for this at about 12/1. Yeah, let's put it at, go ahead and put it at 12/1. We could put it earlier this week if we wanted to, but we're going to go ahead and go to 12/1. So the options that actually expire next week we're not going to see. Let's go ahead and submit that. Yep. Okay, so TSL moving up in price. We see our December 20th, the standard expiration. This stock doesn't offer weekly options. So we just see the standard December expiration and our standard December expiration. Naturally, we wouldn't expect to see too many strikes, so the slightly out of the money now, really the at the money 10-strike call for December with a current premium of 62 cents, we could afford to buy 7 contracts with that $500 investment. And if the stock did hit our target price of 11 on December 1st, just after the expiration, just after the earnings, excuse me, on 11/24, or December call here, we'd expect to be 128, and that would yield the highest theoretical return. But as we noted, look at this implied volatility right now at 70 cents for Trina, or 70% for Trina Solar. Is that in the high range, or is that in the low range? And should I expect a volatility crush for this long call using the long option finder as an earnings play? Well, as we did before, let's use that more information button. Let's go to research. Let's take a look at this option. Current implied volatility range is not that wide. Well, it's not that high. It's at 64.1%, but we do see the total range has been about 34 to 90. And let's take a look at that implied volatility for our option over time. Delve real deep into this. Let's scroll over here. Let's look at the whole time frame. And we started off at around 0.74 when the option was first released, and it reverted back down to about 0.63. You see as the option bid increased over time on the black line, probably because the stock increasing in price, that's when our volatility dropped a little bit here down to that 0.3, 0.34 range, and then we moved back up. So maybe an average here. We're right about at the average right now, even with earnings coming up. But let's say we did have a crush, and it went down to 0.40 after this earnings, maybe even a little bit lower. Let's call it 0.35. Let's call it just at the lower end of our total implied volatility range over the life of this particular option. Let me go back in, and I need to use these numbers instead of using the 0.70 and the 0.67s that are all the way out to January and December. Let's put this implied volatility at 0.35. See how a volatility crush would affect our results. Okay. Now it did affect our results pretty drastically. Instead of looking at close to a 100% gain for the December 10 call using that 0.70 implied volatility, as we move down, the second listing is our 10-strike call, and that would only yield a 65% potential return from the 62 cents we have right now to the estimated price of 105, just a little bit above intrinsic value, as a matter of fact. And the 9 call would go right to intrinsic value, but with an original price of $1.13, moving up to $2, this would be a gain of 87 cents per contract, and it'd be 75% of our original investment of $1.13. So if you are expecting a massive volatility crush, analyzing long options, the best long option to buy or the best long put to buy, you simply change that implied volatility field, but to gauge what your implied volatility might be or where the volatility might collapse to after that earnings event, use the More Information menu, go to the call research, and take a look at the implied volatility range. Where's the option's implied volatility now compared to where it has been over the life of the option, and run both scenarios. Run the worst case scenario. What would happen if the implied volatility dropped to the low where it has been over the life of the option, or maybe even midway between its high and its low, depending on where it is right now, especially if it's in that upper 80 to 90% of its implied volatility range for the life of the option itself. So I hope that those of you that are trading long calls and long puts right now can see the advantage of using this tool to help you quickly calculate and determine which option will give you the highest yield based on your sentiment for the stock going forward, and of course your target date for the position as well. Now, of course, we may be faced with another situation. How do I identify long calls or long puts based on what's available on the market and what I want to look for today? I get this question a lot for trial members and subscribers asking, well, what are the criteria I should use for identifying a new long call position? Well, at any given time, when you go into our long call menu, you can go directly into the search tool, or you can view the sample searches screen to see preset criteria that you can use as a stepping stone to create your own personal long call or long put search. Some of the defaults that we have set here for our long call position are the current option volume. One of the filters that we can use in PowerOptions is, of course, looking for options that have an increased percent volume. This default search is looking for long calls where the total option volume today is greater than the average total option volume for the stock. So we see an increase in volume over that time. Let's go ahead and take a look at our current option volume screen and see what's available right now. And the filters that we use are the percent previous option volume. We can also use the percent current option volume as well. So a 100% option volume means it's trading evenly to where it has over the average of the last 60 days or so, the last 90 days. For AbbVie, at 65.04, we see the 67.5 strike. Excuse me. Currently has an open interest of about 8,000 contracts, and the previous option volume was 339, which is 319% of the average option volume for this position. It has a low implied volatility, of course, and a relatively low option ask for a 95 3-month out at the money or slightly out of the money option on a $65 stock. And of course here we're looking at a stock that's near the 100% of its 52-week range. Now again, as we did before, we could look at further details if we go into research and we select option research to take a look more in depth at the call option. And our implied volatility is actually near the lower range for this particular position. We've seen the call, maybe missed a little bit of gain here, but we see the call increasing in price over time as it's jumped up from a low of about 0.20 cents, that's a bid price, up to about 130 or 140. We should probably use the ask. Let me just switch that there. We want to use the ask price instead for evaluating a long call or a long put position as well. All right, so let's just use that. So here our ask price is a little bit higher, 26, 27 cents. That's in the near term, but if we go back over time, the ask price has been as low as about 20 cents here a couple times, and then we've seen a recent climb as the stock likely has moved up. If we took a look at the stock chart as well, we'd probably see an increase in the stock price also. And then, of course, we see a large number of options on Silver Wheaton and Ford Motor Company, likely due to recent news that has come out or potentially an earnings date coming up as well. I don't see anything with the 11-month, but we do see a December one coming up on Accenture also. Now, as you scroll down below, you can see the criteria that's being used. That percent current option volume, we're actually looking at 150%. So the current option volume not only do we have to see at least 100 contracts, hard contracts traded today and the previous trading day, but our current option volume has to be at least 150%. So we have to see a current option volume that's at least 50% greater than the average over the last 60 to 90 days. So that's one of the searches you can use. For those of you using long calls or long puts, you can use that sample search menu specifically focusing on volume. And if you wanted to use a higher range, if you only wanted to see those options that are available that had a 300% current option volume or higher, you could just change those values, use the 300% filter, and look for a greater increase in option volume. Another search that Ernie put together is based on the Bollinger Band ranges, looking for Bollinger Band breakouts where the stock is trading at or near, is just broken above that upper Bollinger Band, which sometimes leads to a large gap if it's able to sustain that. And of course, if you don't use Bollinger Bands, back on the main long call homepage, there's a link to an article there that discusses how we use the Bollinger Bands for long call and long put analysis as well. And essentially, under our technicals tab here, oops, sorry folks, we're looking for stocks where the current price is within 90% range or higher of that upper Bollinger Band. And for those of you that aren't familiar with the Bollinger Bands, let's go ahead and take a look at the charts. I'm going to link over to Big Charts here. And we can customize Big Charts. I don't have it stored right now, but let me change my view. First, I'm going to change it just to a 6-month view to clean it up a little bit. And on my indicators, I want to select the 20-day moving average. We'll explain why in just a moment. And for my upper indicators, I'm going to go ahead and use the Bollinger Bands. And then I might use things such as MACD, slow or fast stochastic, RSI, for example, and maybe just the volume as well. Let's go ahead and draw that. And actually, I'm going to change it once more, folks. I'm going to go back to a 3-month chart. Okay, so the Bollinger Bands, what we're looking at here are Bollinger Band envelopes, for those of you who are not familiar with it, are these two red lines that we see on the graph. There's an upper and lower Bollinger Band. The Bollinger Bands are based on sort of the 20-day moving average, which is why we selected the 20-day moving average line, which shows up in the middle of our graph. Now, the idea behind the Bollinger Band trading, the way that we approach it is more of the straightforward view. And what I mean by straightforward view is that when you see a stock that's trading at the upper range of its upper Bollinger Band, if it breaks through that band, that usually indicates a breakout if it can sustain over time. Now here we saw it break out at about 105. It moved above the upper Bollinger Band. It stayed there. Well, it did pull back, but then it continued to move up. So we had a nice breakout here, and it moved up from about 104 to about 114. So that's about a 10% increase in that time. Now, it doesn't always happen that way. We see here before the stock was hitting the Bollinger Band a few months ago. It never really crossed it, but then it had a pullback. And it stayed right around the 20-day moving average, right around the 100 level, pulled down a little bit, and we had a fall here, but now it's been recovering from that. Many stocks you'll see that break this lower band and show a sustained lower band will show a breakout to the downside. So when I'm looking for bullish positions, our approach is to look for stocks that when they show a slight breakout here, we're expecting a continuation going forward. So we want to start looking for stocks that are in that upper 90 or 95% of their Bollinger Bands or have crossed it. If I'm looking for put options, the Bollinger Bands for the long put screen would be looking for stocks that are 10% or less, maybe 15% or less of this Bollinger Bands range. We're looking for stocks that are trending below the SMA 20 and near the bottom band, hoping for a breakout and then a continual dip down in price as well. So those are the things we might look for. Let me see if I can find a chart for you. One of my stocks that I'm actually in on a bullish position that didn't go the way I wanted. Let's see in the last 3 months, GPRE can give us that same view. Let's go ahead here, but on the downside, of course. Okay, so this is GPRE. And we see here the stock was trending up on the Bollinger Band, but it never really broke through. And then it did drop below the 20-day. And then right here we had a break below the lower Bollinger Band, and it sustained it. So we had a decline. We broke here, and it sustained it. So at this price here, an entry of about $40 or so, over the next 2 to 3 months, it continued to move down and move down again. Now when would I look to see this reversed? Well, good view there is if it breaks back above the 20-day moving average, well, we could have gotten out here for a profit. Here we're still profitable if we had entered at the breakout of about $40. Here we're at about 32, 33, so still a good range. But once it's crossed the 20-day moving average, the stock might try to tend to recover and move further back up in time. That's a discussion for a later time, but I just wanted to illustrate why we're using that Bollinger Band screen on our long call searches. And again, if you just go back into the long call or long put main menu, there's an article that Ernie wrote here on using the Bollinger Bands for long options, whether you're doing long calls or long puts. Those are the stepping stones that you can use as well. Now, for creating your own search, if an investor, one of my customers, trial member, subscriber, called up and said, I want to search for long calls, what criteria would you use? Well, we can't give direct trading advice, but if you have that question, Mike, what criteria would you use for a given strategy, or you want to ask Ernie what criteria he would use for a given strategy, the sample searches is a good place to start. Ernie will use the Bollinger Bands. I might use the volume or the Bollinger Bands. But if you just go into the main search screen, in the main search, anytime you click on search in one of our 23 different strategies that we support, the default search you'll see is an initial values or a default at the money screen, depending on the strategy. For covered calls, you might see at the money or the broker recommended screen. For other strategies, you'll see different themed searches. This initial values search is the default criteria that I might use as a starting point when creating my own long call search or looking for new long calls myself. I see a lot of common names here: Visa, Canadian Railway, FedEx, Cummins Engine. These are like water cooler stocks, stocks you hear a lot of discussion about maybe from your colleagues or things of that nature, your investment friends. You see in the news a lot. What are the big names that come up? Well, naturally we know Apple. It's people write 1,000 articles a day on Apple just to get clicks, or Netflix or Amazon just to get clicks for their blog or for their article writing. Might not be a lot of substance in those articles, but you can probably read 1,000 to 1,500 different articles on Google, Amazon, Netflix, and so forth during any given trading day. But these positions are based on the criteria that we're listing down below. Now let me review these real quick. We'll start off with just the basic fundamentals, the stock fundamentals. Stock price is really irrelevant when we're doing a long call screen. We just put in a broad view there of $10 to $350 per share. If you prefer to look for long calls only on stocks above $100 but less than $500, just want to make a change to that stock price field. What Ernie and I feel is important is that if we're looking to buy long calls, whether earnings are coming up or not, and I typically don't play a lot of long options for earnings plays, but the earnings per share growth, reflecting how the stock has grown in earnings over the last year, I usually want to look for something that's shown positive and strong growth, maybe 10% growth in earnings over the last year. We like to keep a relative PE ratio between 0 to 70. Many of you have joined me for other webinars and seen we've put in fields of a price to earnings ratio of 0 to 50. And a PEG ratio, the price earnings to growth ratio, of less than 2. If you specifically wanted to look for stocks that had an earnings date between now and an expiration date of your option that you're interested in selecting, or you're specifically looking for securities that have earnings coming up near term with the matching criteria, whether using Bollinger Bands, whether using MACD, well, we could just select to show only those stocks that have an earnings date between now and, let's say, 3 weeks from now. Let me actually run that search and see if anything in our list comes up, or if most of them have already had earnings. Okay, so we have a few. Surprise, there's Home Depot, Toro Company, and Ambarella as well. So these are the three that still have earnings coming up between now and 3 weeks from now, but match the stock fundamentals we were looking for. And also the stock technicals. We want stocks to be trading. We don't want bottom-feeding stocks. We want to see stocks that have been trading 30% or higher of their total 52-week range. Ernie likes to use a broker recommendation, so we're looking for stocks that are recommended as a buy or a strong buy recommendation. And we're looking for stocks that are already in an uptrend. Okay, the stocks that have shown strength not only in fundamentals and good management for the earnings per share growth and the price to earnings ratio, but also stocks where the 20-day average is currently above the 50-day moving average as well. So the current price in the 20-day has to be above the SMA 50 for the stock in an uptrend. Now, you could use other things. If you want to use RSI, If you wanted to add Bollinger Bands to this list, we could filter that down. You could also use MACD. If you look for a specific MACD where the MACD is above the signal line, or both the MACD and the signal line are above that zero baseline, that is something that you could use as well. All right, and now for the options themselves. Well, we're looking for options that are no more than a couple strikes in the money. We're looking using the Black-Scholes ratio to make sure that the long call is not too overvalued, right? The Black-Scholes ratio here, 50-day, the current price of the option divided by its theoretical worth using the 50-day volatility. A Black-Scholes ratio of greater than 1 means the option is overvalued compared to the market sentiment. So if we had a Black-Scholes ratio of 1.10, that tells us that the current option is 10% overvalued compared to the market expectation. For this long call screen, we're looking for positions that are, my apologies, that are less than, can't be more than 5% overvalued. So they're undervalued, no more than 5% overvalued as well. And the option ask price here, well, we've got limited results anyway on reasonably priced stocks within the $50 to $100 range. It came out with these 3 results. And the bid price isn't, the option ask price isn't that high to begin with. We're using a default of $15 for some of the stocks that might be in the $300 to $350 range that we saw in that initial search criteria. However, if we wanted to adjust this, because we didn't want to pay more than $10 per contract, we could just drop that down to 9. I don't think I made any other changes yet other than that, but we can go ahead and run that search, and we'll still have the same 3 results for Home Depot, Toro Company, and Ambarella based on the premium, as all of them were below $10. Now for this particular screen, we didn't enter anything for strong volume today or open interest. And probably any value that I put in within reason is going to be covered. You can see here that the open interest for these options, this one's far out. You know, we are looking farther out in time, I want to admit that. When you're looking to buy options, it's best to go at least 3 months out in time or so, give the stock more time to move in your desired direction. So we have 95 days out, 123 days out in time. And we still have maybe not that great volume on a daily basis, but the open interest is still pretty strong. 750 contracts, 359. Not the open interest in volume you see if you're looking at a weekly option on, say, Apple or Google or maybe Priceline or something along those lines, where you're looking at an open interest of maybe 20,000 to 50,000 contracts with a current volume today of 8,000 to 9,000. But for a far-out option, this is still a relatively strong open interest, and we do see some activity on a regular basis for these particular calls going out in time. Now that's our preference, but this whole tool is designed that you can plug in specifically what you'd want to see. If you are a shorter term investor and we put in that earnings date that we wanted to be between now and 3 weeks from now, so we didn't care if our option was more than 50 days out in time. So we wanted it to be between 10, well, 3 weeks out, let's go ahead and call it 20 days to 60 days out in time. We could change that, and let's see if we find anything. Okay, so we still got Home Depot with that shorter term option to December we saw earlier. Ambarella's still in there. Tyson Foods is back in. We saw that on one of the ones that has earnings coming up. Good open interest still in all 3, although Ambarella for the shorter term December is a little bit lower, but good previous option volume. And we could customize the view by clicking on Choose Columns to view other ranges. And notice what's interesting about all 3 of these is the Bollinger Band range is pretty high, and for Tyson Foods, that stock just gapped above that upper Bollinger Band. It's got a 122, so it's moved above the upper Bollinger Band today at close. And that might be an opportunity for a breakout, and the earnings are coming out 11/17. Oh, it came out today, I apologize. That's the one we saw that came out today, TSN Tyson Foods. So the prep, maybe it came out this morning, that's why it's up 2%, about a 5%, or 2 points, excuse me, about a 5% gain. Let's see here, 1 second. James, can it filter by unusual option orders? Well, James, not right now. I don't know if we're receiving that data. We are receiving the data for certain orders that come through, I believe. I'll have to check with the programmers on that. But then you have to put in logic into the system to identify if you're getting that data for what an option order is on one strike or one particular strike or one call or one put. For example, what is deemed unusual? Naturally, so you have to set fences on every available option, every underlying stock, because what's unusual for TSN or Home Depot probably wouldn't be an unusual setting for something such as Apple or Google or Netflix or Amazon. The exponential increase of open interest or straight order that came in would be much different for those securities. And of course, we saw earlier that Trina Solar at 953, probably not seeing a lot of activity on those options on a regular basis unless it's coming up to an earnings event. So it would be a completely different fence descent as well on that particular strategy. So right now, no. You can't filter by unusual option orders. That requires a little bit more thought and a little bit more data, I think, than we have available right now. But it's one of the things that we're looking to implement as far as buy orders, sell orders, and so forth, whether they're filled or not filled. Outstanding orders, I should say. Charles just asked a quick question. I'm sorry I'm late. Is this recorded? Yes, we did record this presentation. I'll probably be able to have it posted and ready for you in the webinar archives tomorrow afternoon, or tomorrow morning. My apologies, Charles. Tomorrow morning, not tomorrow afternoon. I doubt it's going to be processed and available this afternoon, this evening, but it will be likely available tomorrow as well. And of course, the long puts was the same process. If I was going to do puts, we could go into the sample searches. We have that screen for the Bollinger Bands, looking for puts that are in stocks that are in a downtrend, where the put is near that lower Bollinger Band, and also the range for current option volume. We're looking for an increase in option volume today. And then, of course, stocks in a downtrend with low broker ratings for potential put option purchases. And again, when you go into the search, if you had it on your mind, you know, what criteria Ernie or myself might use to identify potential long puts, well, here's the Bollinger Band screen there. And there's also the basic initial values that you can use as a default setting, where we've reversed some of the concepts for the earnings. Stocks in a downtrend. Hess Corporation is an interesting one. It's currently in a downtrend right now. Not a lot of volume today, decent open interest. And looking at some of the other ones, First Solar we saw, Twitter, of course, Southwest Energy. These are ones that match the put criteria, where we're looking for stocks that don't have a good buy or buy recommendation. They're at the lower end of their 30-day, lower range of their 52-week moving average. The stock is currently trading in a downtrend as well. And, of course, we're looking for those similar option criteria, 75 to 150 days out in time. And if we wanted to enhance that by adding in MACD filters or adding in Bollinger Band filters, as we discussed before and as mentioned in the article that Ernie wrote there, we could go into technicals and we could adjust what we'd want to see for Bollinger Bands. Let's try to see if anything is under the 15 percentile, that lower Bollinger Band range. Okay, so we still have some of those ones here. Let me go back here. Let me store these chart settings real quick. Just want to take a look. All right, so this was GPRE we looked at, and we saw that lower Bollinger Band range. It's already broke down below that. Let's go back to the search. Let's take a look at First Solar. Let's look at the chart here and see why is this appearing in our long put screen. Well, there you go. Okay, so we had sort of a movement below the lower Bollinger Band here. It didn't quite sustain it, but it did have a nice drop. A breakout again that it sustained, but then it started to revert. Now we've kind of touched that again. It's been dropping back down in price. MACD is also low, and the relative strength is naturally dropping also, getting to that point. We've seen a nice decline in this stock over the past 2 or 3 months. Whether that's something that means we might have missed the boat or not, I'm not sure. But this matches our criteria, doesn't it? It was in that lower range of the Bollinger Band. It's been dropping continuously. It had a drop. It tried to recover, and then it's dropped further. And at the same time, it's definitely in a downtrend. So those are the things we'd want to look for, potentially. But the whole point here is that you can customize this tool any way you want to, whether you want to adjust the time frame or increase the volume or open interest for the options criteria. If you have a specific filter you'd like to use for implied volatility or implied volatility ranges, this patented search will allow you to plug in your specific needs and requirements. For the technicals, we can look for stocks that are trading at the top end or the bottom end of their 52-week range, of course, relative strength, Bollinger Band ranges, days that the stock has moved above or below its 20-day or 50-day moving average. In other words, how steep is the downtrend if it's below its 20 or 50-day or above its 20 or 50-day in an uptrend. And, of course, using the MACD lines to analyze if the stock is continuing to trend down or if that's expanding. And if we wanted to look for stocks with lower earnings per share growth, a higher PE ratio, we could do that as well. If we wanted to look for lower cap or mid to lower cap stocks for a put search, you can do that also. In addition to that, you could use that same criteria, remove some of the basic fundamental and stock technical criteria, and we could choose to just screen for puts to buy on indexes or ETFs if we're looking to potentially buy puts on an index or ETF to help hedge our total portfolio view as well. One last thing I want to show, and let's go over to the free webinars link here. I just wanted to go to this page real quick because I wanted to show everyone where you'll be able to find this particular webinar that we're going to archive tomorrow. If you go under the options strategies view, actually, yeah, I believe I'm going to put it here in the Power Options Tools section for right now because we focus mainly on the long option tool. And this presentation is going to replace this one here, picking the best long calls and long puts. So when you go to the webinars page, I'll send everyone a link here to the free webinars page. It's actually a public page. You can access it at any time. You don't have to be logged into your Power Options account. It's, if I can spell, it's powerup.com/webinars.asp. And this is the public page again. So when you go powerup.com/webinars.asp, sometime tomorrow morning you'll be able to click on the Power Options Tools, and then you'll see the new webinar here. It's just going to replace this one because this content's a little bit better as well. Now, for those of you, 10% of you, was it? Yeah, 10% of you had mentioned that you're looking to protect your positions, or you're looking maybe to protect your portfolio using long put options on the indexes or ETFs, or maybe long calls in some of the inverse ETFs and so forth. If you go to this webinars page and you click on Options Concepts, there's a presentation available here called Stock or Portfolio Insurance. And this tool sort of walks you through, this webinar sort of walks you through some of the analysis of using put options on an index or ETF to protect your portfolio versus individual protection. You know, converting your stock positions to a married put or collar, the cost of that versus what it gives you back in insurance if you do have a downturn. Also versus looking at some of the inverse ETFs, buying calls on the inverse ETFs if you're worried about a market downturn, or using options on the VIX, the Volatility Index, to help hedge your portfolio. So there's a good webinar for you to view for that 10% of you that are maybe looking to use put options and which puts to buy to help you with insurance if you're worried about a market collapse or even a sector collapse. A gentleman discussed with me this morning. He follows someone by the name of John Carter, or he reads those articles, these publications by a gentleman named John Carter. I'm not familiar with him, not endorsing him, and I'm not putting him in a negative light. But apparently this commentary was his sense of this John Carter's sentiment was that the price of the dollar, I guess, might double within the next 3 months, or the trend of the dollar might double in the next couple of months or so, which would have an inverse effect on oil and gold and silver, for example. And the customer wanted to know how he could best play it. And I said, well, you know, the best thing you might be able to do is look for long put options on the gold ETFs or the silver ETFs, or maybe the oil ETFs. OIH, for example, is one. There's also 2 times and 3 times bull ETFs. And, of course, I had him go to the long option finder and look up OIH and see which puts would match based on his expectation of where the oil industry or the oil prices might fall, how that would affect the whole sector. Taking a look at OIH and seeing which options might give the best potential yield to hedge a total portfolio. So those are some of the things that you consider what you have going forward based on your market sentiment. But this webinar will get you a little bit more into that, taking a look at stock or portfolio insurance there for that discussion also. Okay, well, ladies and gentlemen, if you have any last-minute questions, go ahead and send those in. That's essentially where we wanted to stop for today. For this presentation here. Your next steps, if you haven't done so, go ahead and register or re-register for your 14-day free trial. Al just sent in a comment. Thanks for extending my trial. He emailed in, need an extension as trial. Hey, no problem. If you're on a trial and you don't feel you're going to be able to access it for a 5-10-day period, just let us know. We'll be more than happy to extend that for you. If you've already had a trial, let's say a year or 2 years ago, and you want to check out the Power Options tools again, you'll be able to go to powerup.com, put in your email address, and you'll probably be able to reinstate that trial account, no problem, to have access for another 14 days. If you haven't done a trial recently, of course, there's no credit card or billing information needed for that 14-day free trial. All you need is first name, last name, and email address. And you'll have full access to PowerOptions for the next 14 days. For those of you that are currently on a trial, make sure that you go through the webinars and the help videos that are listed on the various tools to get more acquainted with the tools in PowerOptions. And then that webinars page we just showed, make sure you go through some of those specific PowerOptions tools archives to get more familiar with the search and analysis tools and the portfolio tools also. And remember, those of you that are on a trial, you can schedule a coaching session at any time. When you're on your trial account, let me just navigate back over there to our PowerOptions screen. All right, fantastic. When I'm on PowerOptions underneath the main home tab, I can just click on free coaching, and we can schedule sessions that are available on Tuesday, Wednesday, Thursday, and so forth. It's essentially a 35 to 45-minute phone conversation with myself or Ernie. We'll walk you through the tools on the site, answer any questions that you have. And it's important to note that as a trial member or as a subscriber, you can have as many sessions as you want. They're completely free, and we do not charge for them. In addition to that, those of you that are currently subscribers to PowerOptions, remember, you also want to go to some of those new webinars and help videos. We're posting new webinars and new help videos each week. Schedule a coaching session anytime. We'll be more than happy to hear from you. We'd like to help you to make sure that PowerOptions is working for you. And of course, you can just call or email us at any time. We're here from market hours Monday through Friday, so if you have any questions at all, a quick question comes up, just feel free to call us during market hours or send us an email at any time. And of course, there's the contact information, so if you do think of questions later, call us during market hours. If you're inside the U.S., you can reach us at 877-992-7971, and if you're outside the U.S., you can reach us at 302-992-7971. Of course, please feel free to email us at any time to support@powerop.com. So we'll be more than happy to help you out with any of those discussions that you have as well. All right, well, I don't see any last-minute questions coming in. Ladies and gentlemen, I want to thank you again for joining me this afternoon. I hope you got some useful information and were able to see how that long option finder tool is going to be very helpful to you, putting in your stocks and your sentiment price to see very quickly which is the best option, give you the most bang for the buck based on your market sentiment, and how powerful those search tools can be for identifying just those long calls that match your specific needs, whether you're focusing on options that have the highest current option volume or percentage current option volume, options that have lower implied volatility or higher implied volatility, which you'd usually be selling, how you can use those different technical indicators. You want to check out that article on the long call or long put homepage on the Bollinger Band screen, and how you can use that, and how you can use those default Bollinger Band searches as a stepping stone to create your own personal search as well. It's very easy to customize that search tool to find just those calls and puts that match your specific needs. And if you need assistance with that, again, give us a call, send us an email, or schedule one of those coaching sessions, and Ernie and I will be more than happy to help you out with that. Well, take care, everyone. Have a fantastic trading week. We're at standard expiration, of course. This Wednesday at 12 noon, on that webinars page, which you click on the live webinars link, you'll be able to see, of course, the upcoming webinars. Wednesday at 12 noon Eastern Time, we're going to have a discussion on using the portfolio tools. As we're getting close to expiration, we want to walk through using the portfolio tools to show you how powerful they are for tracking, managing, and evaluating rollout opportunities and adjustments on your positions, whether you're doing covered calls, long straddles, iron condors, credit spreads, collar spreads. We have analysis tools that you could use as you're tracking those positions in your portfolio and PowerOptions to help you see which positions might give you the best return or potentially turn a losing trade into a winner as well. And then Friday at 4:30 p.m. Eastern Time, we're hosting the open discussion presentation, the open forum Q&A session. Just bring your questions. I don't have any planned material. We'll be here from about 4:30 p.m. to 5:30 p.m. Eastern Time, Friday evening. And the whole point of that presentation is I just handle your questions on the fly and answer any of your questions that come in as best as I can using the illustrations from the PowerOptions tools as well. So thank you again, ladies and gentlemen. Take care. Have a great trading week, and I hope to see you on one of our live presentations coming up. Good night.